afternoon, everyone. Thank you for joining us today in this episode of Beyond Connections, where you can ask us analysts about the stock market today and basically what's happening around the market and the news around the market. So, just to introduce, I'm here with our analyst. I'm Rainer Yu. I cover the consumer stocks and yes, can you introduce yourselves.
Hi, good afternoon. I'm Herman, one of the analysts, and I cover property, telcos, power, and gaming.
And hi, I'm Bess. I'm also one of the analysts from MyTrade. They're up to securities. I cover banking, the economy, and some other stocks. And lastly, there's
I'm Isaiah. I do the technical analysis for one of the technical analysts for the MyTrade platform Facebook.
Okay, so thank you guys. So I guess that's our introduction, and basically from what you've heard, you can ask both technical and fundamental questions that you may have, especially given the various events or news that has been circulating in our market today. So I guess we can already proceed. We have a bunch of questions lined up. Thank you guys for tuning early and giving questions. So good afternoon, everyone. So first, I think we can start off with Rand's Realtor. So good PM, what's your insights about Emperador? Since tomorrow is the last day of trading before the effectivity of FTSE rebalancing on Monday, is it okay to take EMI versus AGI? So first for EMI, we're not so particular on adding EMI since when it was trading at about 20 to 21 pesos, we have been recommending take profits on the stock, given that the company is experiencing some headwinds practically on its margins, and we're currently looking into it, but current based on the current prices. It is still trading at the more expensive level, especially if we compare it to its peers. So, in this space, we continue to prefer other names such as Keeper, since it is seeing much higher growth compared to EMI, and even on the top line and bottom line numbers. Our preference remains to be on that. But EMI currently still, I think, one of the leaders in terms of PE compared to its peers. So, I guess to chop that question, the second part is it okay to take EMI versus AGI? I think our preference would still be on AGI rather than Emperador. Basically, coming from but on a valuation standpoint, AGI is much more attractive. And if you can see, AGI, since it is the conglomerate, it also holds Emperador, so you are kind of getting a stake of Emperador if you really want to get your hands on the stock, or basically an exposure to Emperador. So prefer AGI, especially given actually it depends on what will happen tomorrow, but most likely our preference will still remain to be on AGI.
sorry, maybe just to add to that, when the FTSE rebalancing changes were announced in February, AGI's share buyback program was paused. So we expect that to resume once the rebalancing takes effect on Monday. So after that, the share buyback program might resume for AGI since they still have some balance left on their budget for that. So that's also one of the reasons why we would prefer AGI over EMI if you're choosing between those two. To pick up either of those two based on the rebalancing movement.
Okay, so I think we can show a chart on AGI and EMI. Since I think AGI showed some support rather than EMI, especially yesterday. AGI.
Maybe we can see the chart.
Here's a chart for AGI. You can see it has been in a long-term downtrend, but has been testing support here at 976. So far it's just range bound between support at 977 to the resistance at 1174. But you can see at the bottom of the panel, the momentum is turning more, well, less bearish and more sideways.
Yeah, I think AGI showed a pretty good bounce yesterday, but what about for Emperador?
Yeah.
Seeing some pressure still.
Whoa, I haven't seen this in a long time. Very strong, very aggressive selling here. It's reaching near oversold levels, possibly between 638 to 1562. But as they say, don't catch a falling knife. Would you agree right here?
Oh, yeah. I say, well, it depends on your strategy. I think some would trade on the bounce.
Trade on the bounce.
So thank you for that question. Thank you, IC, as well, for the technicals. I think we can move on to the next question. Coming from Julian. What's your take on ICT? It's still on an uptrend despite its extreme trade.
Okay, so maybe before we look at the chart for ICT, we can discuss some of the fundamentals. So it released ICT released their full year results, which were pulled down by a big impairment charge on one of the receivables relating to a cancelled port deal in Sudan, since there is a war that broke out in Sudan. But if you take that away from the net income numbers, their core income was actually positive. If I recall correctly, it's about up by 7 or 8%. Also, their yields are improving. The yields are back to the levels before they consolidated Manila North Harbor, which was a lower yielding port compared to their global average. So they were able to achieve this recovery in their yields because of some tariff adjustments on various ports last year, and there are still some increases that they expect for some of their Philippine ports this year in Subic, in Davao, and in the second half for Manila International Clearing Terminal. So that should put some upward support for their yield per TEU. Also, their volumes were better than the global trade volumes, since they are focused on more on ports in frontier markets where the economic growth is comparatively higher than the rest of the world. So that supports their volumes. If we only take into account the recurring volumes, so since they closed their Pakistan port and also got a big volume boost from the consolidation of Manila North Harbor. And also there might be it might not be as known in the market, but there is some support to ICT share price, since it was added to the FTSE ASEAN 40. So the ASEAN 40 is one of the indices of FTSE that is comprised of the 40 largest stocks in 5 ASEAN countries, including the Philippines. ICT and actually BPI were added, so that's lending some support to their share price, and that's probably why it's still quite strong, even if the exits for their cash dips was today, as you said. We chart now, I think.
So the interesting part about the chart of ICT is where the oscillator is located. The most similar time was in September 2021. So it suggests that it could be a bit of a pause at worst, or a bit of sideways action, or even a pullback before it continues higher in the short run.
Okay. Thank you for that, IC. And I guess we can remind we can remind our viewers today that the FTSE 40 or ASEAN 40 will be effective on Monday. So
Yes.
last day of trading tomorrow. Again, being added ICT and BPI, and the one that is to be excluded is SM Prime. Okay, I think we can move on to the next question. Okay, from Elijah. What is the best REIT to buy right now? Now,
Close to market.
now,
I thank you for the question. Best REIT to buy right now. So, listed REIT companies have already been disclosing their dividend declarations coming from Q4. Some have fallen short of our expectations, while um, a few of them have met or even surpassed by a bit our expectations. And among those that met our estimates were RCR and I think AREIT. Although between the two, RCR has the more more attractive yield. So for now, I still prefer RCR and also CREIT because those two, in my view, have the longest runway for growth. If you compare the gross leasable area of their parent or sponsor companies, and if you compare it with RCR and CREIT's gross leasable area, so a lot of assets are still yet to be infused into these listed REITs. So the runway for growth is still substantial. So aside from offering yields of around 7.7% to 8%, and if you consider in the room for growth, RCR and CREIT for me are still my preferred REIT companies among its peers.
okay, thank you, Herman. But I think Siri has yet to announce dividends. I think so. It's the last one.
Siguro kasi just to, they're also computing, magkasabay kasi yung regular dividends nila from Q4 as well as yung special dividends. So I think and then they disclose it ng sabay. So I think they're computing how much of their variable revenues can be distributed as special dividends. So that's why I think it's taking some time, but still naman, very comparable pa rin with the timeline from the previous year.
Okay, thank you, Herman. It's very insightful. Okay, guys, you can choose the next question.
There's one from Julian again.
Julian. Outlook for MED, please.
So, FANDA. So while IC prepares the chart, I know when guide big caption. For Metro Bank and actually for the banking sector in general, we switched our outlook to neutral on the expectation that NIMs or net interest margins will be feeling some negative pressure later this year once the BSP starts to cut rates. However, since the expectation now is later than we initially expected, so probably by June or August would be the start of the easing if we are correct. This means that the negative impact from that on their asset yields are also going to be delayed. So that's been positive for the banks and has actually been supportive of their share price, including Metro Bank. So, however, over the medium term, we are still maintaining that neutral stance since we do expect that pressure to come in second half and for loans to continue to languish at about mid-single digit growth levels. And we don't expect loan growth to recover significantly until 2025. And one of the reasons that the bank so far has been able to keep their NIMs relatively flat uh, in fourth quarter in and perhaps even in first quarter, although the first quarter is not yet done, it's because they've been applying some strategies such as for Metrobank, they increased their investment securities holdings, so most of the interest income, or a bigger part, not most, but the bigger part of the interest income is now coming from accrual income on their investment securities rather than just on loans. Um, Also, they are able to reduce some of the interest expense by funding some of that through forex swaps, although this is to a smaller degree than some other banks. Um, we don't think these strategies will be that sustainable over the course of the rest of the year, and we expect that we will start to see some impact from the slower loan growth and also lower interest rates later this year. So we're currently neutral for Metrobank. Also, Metrobank's CASA ratio has gone down in the past few quarters, especially compared to during the pandemic period. This is negative uh, for their funding costs. So that's also going to be part of the drivers for the downward pressure on NIMs.
Actually, si MBT pala declared very high dividends this year. Is that a surprise or is it expected and will it be sustainable?
I think they declared that special dividend connected din sa may slower than expected loan growth. So right before the pandemic, they raised some capital and then they were not able to deploy this because of the pandemic, the loan demand was much smaller. And so they've had that large amount of capital just sitting on their books and not really earning money for investors. So they are sort of returning it to their investors since they're not using it anyway. Their capital ratios will be reduced because of that special dividend, but so although it's still relatively high, I think there will be. I think if ever they will declare another special dividend, it will be at a much smaller amount, or maybe not at all by next year, since we do expect some recovery from loans once that rate cutting starts from the BSP, and we see the demand start to come back next year.
Parang nangutang sila to pay out dividends.
Because they raised that capital before the pandemic, so they were expecting double-digit growth rates for loans before that happened, and it didn't materialize, which was a unexpected worldwide event naman. So
Okay.
TMA.
So I think we can move on to
do the
the
tracks
next.
now. Ayun. So as for the technicals of Metrobank, as you can see, it's trading near the resistance level at 63.55. So historically, this has been an area where some profit taking has taken place. So you can, it's up to you if you want to lighten or sell into resistance.
Okay. So thank you for that question and thank you for the answers, guys. So next question, I think we can take.
which one?
Well,
The non-question question.
Okay, so
It's just stock names.
yes, you can just choose the names. So Bell and PLC.
PLC.
Yeah, I think,
Yeah.
okay, you can show the chart first. It's one of the hotter plays or stocks these days. In case you guys haven't heard, PLC is voluntarily delisting with with Bell possibly placing a tender offer by April I'm not mistaken. So on the charts, first we have Bell.
Yeah, this is Belfort. So it already hit resistance at 241. So you're upside. 241 resistance and spike the share. So volatility is already really happy volatility. So just to play, you will probably want to consolidate further, see if it consolidates at the highs. But until then, just wait and see.
We PLC
Wait and see, but yeah, for Bell.
and MPLC.
PLC. Yes. Start there, yes. PLC, strong buyers outside the channel.
I'm not close.
And a close share at 87 cents.
Yes, yeah.
I don't take profits. So basically, you broke out from the channel, and if you have it, you probably look to buy it at the very least.
From the fundamental perspective, we actually wrote about this recently, and we tried to estimate a possible range for PLC's tender offer price, and applying different valuations such as historical valuations, relative valuations, and past comparable transactions, as well as the upcoming dividends by PLC sometime in April. We estimated potential tender offer price of around 76 cents to 89 cents. So we advise shareholders to take profits if ever it goes beyond, if ever the share price goes beyond the top end of that range. And then for Bell, we don't really see any significant value realization on the part of Bell because they already originally they already own around 80% of PLC, so they're just trying to consolidate the entire business. So there's not much value added there. Only that the entire earnings of PLC will now accrue to Bell. However, we estimate that in order to buy out all the outstanding shares of PLC in order to go to the voluntary delisting, Bell would need around 5.2 billion pesos. But as of the end of last year, they only have around 400 million. So I think they have a lot of shortfall, and would have to raise part of this through debt. So this would the increase in earnings from the consolidation of PLC would be somehow diluted by higher interest expenses. So not really bullish on Bell because of this. So we also advise clients to take advantage of any rallies to take profit. See, next question.
Okay, so thank you, Herman and IC, for accommodating the question on Bell and PLC. So next, let's move on to sorry.
Okay, then.
Election.
Oh, okay. Okay, so we can move on to the next question from Zen. Any forecast on the effects of the upcoming US elections on trading stocks?
Thank you for the question, Zen. We actually wrote about this at the early part of the year, no? Siguro mga January 3. And basically, we are wary of another Trump presidency because when he was president back in around 2016, tensions with China were flared up. So it caused a lot of repercussions as well as the weakening of the US dollar. So I think a repeat of that issue would be detrimental for PH equity. So I think that remains as one of the biggest risks for local equities, the upcoming US elections.
Although I think it's still
Too early.
too early to tell which one will whether Biden or Trump will win the election. So I think they're still neck and neck in terms of who's leading.
Basically, I think it's just about more than I think about 7 months left before the elections. So it's something to watch out for in the coming months. But again, we're focused more on the Philippine stock market, not so much on the politics of whoever will win, but basically the impact. So I guess for the next question,
I think this will be our last question today since we have to end a little early this session since there are some earnings briefings that we have to attend to after this. So last question from Mr. Chris Yao.
yes. So regarding CREC versus CRE, considering interest rates may decline, which could boost CRE's price in terms of total return, what would be more attractive, CRE or CREC, if price at the indicative IPO price? Can you remind us, Herman, how much is the indicative IPO price?
Indicative IPO price is around 3.88 for CREC. So what I think it would be attractive to enter to consider the IPO if the final offer price comes down to around 3.10 in order to provide interested shareholders an attractive potential upside. Now, in the case of what would be more attractive, it depends more on on what you're looking for. Are you looking for a steady yield or share price appreciation? If steady yield, I think CREIT would be more appropriate for you. But in terms of share price appreciation, I think CREIT has more room for price appreciation. So depende na lang sa panlasa man, yield or share price appreciation.
Yes, it's not so much of a apples to apples
Mm,
comparison,
yeah.
given that REIT, some would argue it's a different asset class. But yeah, it's more. I guess the comparison would be dividend payers, while the other is more of a growth play. You can have both actually.
Pero at the indicative IPO price, I think mahal siya. So we'll probably want a much, I think at least a 20% cut sa final offer price before we consider the IPO.
So thank you for that, Herman and Mr. Chris Yao for the question, for our last question for the day. So thank you guys for tuning in. We apologize for the questions that we are unable to entertain today due to time constraints, and we appreciate your time. We'll try to accommodate those questions maybe after the call or even or possibly in the next Beyond Connections, which will happen again 2 weeks from now, basically bi-monthly event. Beyond Connections. So thank you guys. I think you have parting words or you can just wrap up.
If you haven't yet, please like this video and subscribe to our YouTube channel. I've been instructed by our marketing team to say that. And thank you for always joining our bi-weekly sessions here. We appreciate your questions very much. It gives us an idea of what our clients and our potential clients are interested in.
Thank you.
Thank you so much,
Thank you.
everybody.
Time.
Thank you.